Okay, just when you think it can't get any better, Tesla has another record quarter. And as we see here, we can see that Tesla reported Q3 2021 earnings with improved gross margins of 30%. And they beat on EPS. They did $1.86 versus $1.59 expected, as well as a revenue beat of $13.7 billion for the quarter versus $13.6 billion. So we got that going. Then we got the stock price. The past couple of weeks, I've been expecting the stock price to actually go down, even with the huge beat on earnings, and they had a record delivery of cars of 241,000 cars delivered. But the stock has run up so much, it's up 100% on the year. And if you look from May till now, you can see it's gone from $563 to $862. So everything is pretty much priced in right now. And so if anything, the stock's it could go back down to, let's say, $800 or so. But that's besides the point. The point here is that if we're going to go through Tesla's entire investor presentation, and we're going to look through I just read through this entire thing. So we're just going to go through all the important things and the highlights. So right off the bat, we have operating cash flow, free cash flow of $1.3 billion for Q3. Then we have a small decrease in cash and cash equivalents that went down 164 million, which is now sitting at 16.1 billion. And they said that was mostly because they were paying off debt and stuff like that. So, and they're also in the middle of building 2 factories in Texas and in Berlin. So there's lots of construction going on, but profitability is increasing. And as you can see here, we have 30% automotive gross margins, and then $1.6 billion of GAAP net income. Moving on, we got, this is where it really gets crazy here. If we look here, you can see that, like, just when you think it can't get any better, Tesla continues to put up huge growth numbers, even for how big of a company they are. So automotive revenues are up 58% year over year. And they did $12 billion of automotive revenue. Okay. Then total revenues of 13.7 billion. That's up 57% year over year. Operating margin of 14.6%. Net income is up. Look, this just blows my mind. Net income, $1.6 billion of net income just for the quarter. That's up 389%. This same quarter last year, they did 331 million, and now they just did 1.6 billion. That's more than a 5x in net income year over year. Then we have, let's keep going. EPS up 433% on a GAAP basis and 145% on a non-GAAP basis. Free cash flow 1.3. Now this was down a little bit, and this is because they're spending a lot of money building out those factories. Remember, they're ramping up a giga factory in Berlin and their Texas factory. Cash and cash equivalents is up 11% year over year. This is pretty much what I just talked about. Other thing is that their vehicle average selling price declined 6% because a couple of quarters ago they delivered 0 Model S's and 0 Model X's, and however now they're starting to bring that back into the mix. And then this talks about their profitability. They did operating income of $2 billion in the quarter, which is 14.6% operating margin. It says operating income increased substantially year over year, mainly due to vehicle volume growth and cost reduction. So their average selling prices are down, but they're selling a lot more cars and they reduced a lot of their expenses. So that's why profitability is increasing. Positive impacts were partially offset by ASP decline, like I said, in operating expenses, lower regulatory credit, and Bitcoin-related impairment of $51 million. Okay. Quarter end cash and cash equivalents decreased, we already went through this, driven mainly by net debt and finance lease repayments of $1.5 billion. Moving on, this is where it gets a little interesting. So Model S and X production is down 47% year over year. However, if we look from where it was at the beginning of the year, it's gone from 0 to now almost 9,000 cars delivered because they're slowly bringing back Model S and Model X deliveries. But the main focus is still Model 3 and Model Y. And then keep in mind, sometime next year, we're going to see that's when the Model Y, or not the Model Y, the Cybertruck will start getting big. We also have the Tesla Semi coming out at some point. So there's lots of stuff to look forward to. But Model 3 and Model Y production, they did 228,000 cars delivered for those two, which is up 79% year over year. That's absolutely insane. Total production is up 64%, and they did 237,000 cars produced, as well as 241,000 cars delivered, which is up 73%. What else we got here? So solar is up. Solar deployed 46% year over year. That's a huge growth number. That's fantastic. Supercharger stations are increasing dramatically as well. There's now 3,254 supercharger stations in the country or around the world, and that's up 49% year over year. Next up, interesting things here. So they said we saw a global supply chain, transportation, and other manufacturing challenges. We continue to run our production lines as close to full capacity as conditions allow. While sequential growth remains our goal, the magnitude of growth will be determined largely by outside factors. So even with the things like the supply chain issues, the chip shortage, they still did an amazing job with productivity, delivering cars, profitability, everything. Okay, now we have California, Shanghai, Berlin, Texas factories. Once again, Berlin and Texas factories are in construction. And then here it gives you their capacity for California. They can do 100,000 Model S and Model X's, 500,000 Model 3 and Model Ys. And then Shanghai is around 450,000. Then we have the Cybertruck coming. It's in development. Tesla Semi, the Roadster, and any future products. Who knows what the future products are going to be? They could be more cars. We already saw a glimpse of what a Tesla robot would look like. So many different things that are coming out with this company. Our Fremont factory produced over 430,000 vehicles in the last 4 quarters, and we believe there is room for continued improvement. The Model S production continue to ramp successfully in Q3, and Model X production ramp and first deliveries have begun. Gigafactory Texas is progressing as planned. We are in the process of commissioning equipment and fabricating our first pre-production vehicles. Then for China, Shanghai, for all of Q3, China remained our main export hub. Production has ramped well in China, and we are driving improvements to increase the production rate further. For standard range vehicles, we are shifting to lithium iron phosphate battery chemistry globally. Then we have Europe. The Berlin factory build-out remains on track with testing of equipment well underway, and we expect to receive our final permit approval before the end of this year. Then we have this little graph. This graph is very interesting. This graph is showing the market share of Tesla vehicles by region. So as we can see, there is nearly a 2% market share in the United States and Canada for Tesla, and then Europe and China are slightly behind at about 1.3%. But as you can see, they are growing and they are on the rise. So very exciting stuff there. Then next up, we have Autopilot and self-driving. We can see here that this graph shows millions of miles driven between collisions. And it just shows you that Autopilot is safer and all the miles that they are gathered. They have billions and billions of miles of data stored for Autopilot. That's why it's going to keep getting better. So then they talk about, they hosted a AI day and they got lots of applications. This month, they started to expand their full self-driving city streets beta to more drivers, and they're still working on their safety. Vehicle software, we released a refreshed mobile app in Q3 that streamlines the user experience, enables phone key for multiple vehicles simultaneously, and allows commands to be sent to the vehicle immediately upon opening the app, and integrates the purchase of upgrades, subscriptions, and accessories. They also added Disney Plus and some more games, as well as cold weather performance. Then they talk about how they are improving their batteries, and so more exciting stuff there. Then we have total energy storage deployments, 96% compounded annual growth rate over the past 4 years, and we can see that's slowly being built out. It increased 71% year over year, and solar deployments with the solar roof was up 46% year over year. Then we have another, this is super exciting too, another huge profit machine for Tesla is going to be this insurance. In Q3, we rolled out our safety score functionality, which will be used for our telematics insurance product. So it's almost like a Lemonade type of thing, like what Lemonade offers. this is kind of similar because it's going to be more accurate and more efficient way of doing insurance, because they're going to have more data, and it's just going to work out better. It's going to be cheaper for the consumer, and it's going to be a huge profit machine for Tesla. So great stuff there. Here we plan to grow our manufacturing capacity as quickly as possible. We expect to achieve a 50% average annual growth in vehicle deliveries. And then they said we continue to target our first Model Y production builds in Berlin and Austin before the end of the year. So there's only 2 months left until they have to do that. So that's going to be very cool if we see some Model Ys already being produced out of those 2 factories. We expect our operating margin will continue to grow over time and continuing to reach industry leading levels with capacity expansion and localization plans underway. Now, this is all the pictures of the factory. As you can see here, they had a fair outside this quarter, as well as this is what the inside looks like. The factories are just huge. This is the Shanghai factory. Look how big they are. Here, this is inside the Shanghai factory, and they just are, it's crazy how big those are. Now here we have vehicle deliveries. As you can see, over the past, 6-7 quarters, it's just gone up and up, and they just did 241,000 vehicles delivered this quarter. Operating cash flow and free cash flow, especially free cash flow, keeps improving and going up. So that's good stuff there. Well, we did see the one problem was free cash flow was 5% lower this year, and that was probably because of some of the debt they have, and some of things they're paying off debt, especially because they're building these 2 big factories out. So anytime they're ramping these newer vehicles like the Model Y or the Cybertruck, that's when it takes a lot of it's a big expenditure for them. Okay, net income gradually increasing, looking great there. Now this is the trailing 12 months, all the same things. As you can see, vehicle deliveries are up, free cash flow has been going up, and net income has been going up. So then if you want to look at this is more in depth for their revenues and their profit, income from operations, total assets of $57 billion on the balance sheet with liabilities of $29 billion. If we let's look at their current assets, $16 billion in current assets and $8 billion in current liabilities. So that's a great current ratio of 2 there. And then we can see that long-term liability is $3.4 billion and long-term assets $1.8 billion. So everything looks good there. Net cash provided by operating activities, growing very nicely. Once again, they invested a lot of money this year because of their 2 factories, and that is about it. They beat on revenue and on earning. Look at this: FDA clears Johnson & Johnson and Moderna booster shots for millions of people. And then we see here that Tesla after hours is just doing it's at 861, not really moving much, just kind of bouncing around there. So yeah, another great surprising quarter from Tesla, and I'm not sure what the stock price is going to do. I would not be surprised if it went down towards 800, because everything's been priced in, it's been pushed up so much, but we will see what happens. And I believe Tesla is going to be a multi-trillion-dollar company at some point in years down the road.